Hey, all. Today we're talking about bank statement loans. I'm just going to give you some warning about bank statements. I'm right by the Chupacabra Grove. I don't see anything back here right now. You guys got screwed again. Normally they're everywhere. It's just horrible heat. So I'm in Austin. Even though I'm in Austin, I've got like 25 different species of crazy animals running around my backyard. But no one believes me. Bank statement loans are when you're qualified with your bank statements. They take 2 years of bank statements. They average out your gross income. For the most part, as long as it's gross income, they don't care where it comes from. And they also don't take into account debits. They don't take into account how much you spend. There is no debt to income ratio in that sense. But once they do your income, your gross income from those bank statements, then there's a debt to income ratio against your bills on whatever it costs to buy that property. But what I'm trying to tell you now is be careful with these loans. Why? Because they're unregulated in some sense, also because they're low documentation. Low documentation means you're not supplying tax returns. When you supply tax returns, the underwriters kind of know what it means. They look at the tax return, it is what it is. Whereas with bank statements, there's a lot of ambiguity in your bank statement because you could be transferring money in and out of separate accounts and making them look like they could look like deposits when they're actually the same money being transferred back and forth. So you have to be really careful about that. Any large deposit, they're going to ask you to source it. And so what happens with bank statement loans is these underwriters have a million questions, and those million questions mean longer close time. And what it also can mean is that they don't really care. Once it starts looking more and more difficult, they will keep you hanging, especially if you're going through a broker. That broker's putting a lot of work in, they will leave you hanging. So what happens is you get to day 45 and you still don't have a real answer with the bank statement loan, even though they've promised you 25 days. And the problem with that is the seller's not going to put up with this crap. Even in a crappy market for sellers like we have now, the seller's eventually going to pull out and you're going to lose your earnest money. It can be nasty, especially if you go past your option period, which you're going to do because that's day 10. You're going to have a problem with the underwriting in a bank statement loan. So be really careful unless you really know your broker, if you're using a broker, unless you really have an in with a company that supplies these loans and trust them and have done things with them before. So whether you're doing wholesale, whether you're doing something for yourself, keep this into account. This is not always true about brokers, not always true about mortgage companies. I'm telling you examples that are generally the case, generally what happens. There's exceptions to everything. You should always consult an attorney. You should always have a good agent explaining this stuff to you. But this is just a warning for you. Thanks for shopping.